Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, December 8th. We have got a great show planned for you today. First up, the big news of the morning. Paramount has launched a tender offer for Warner Brothers Discovery shares in response to Netflix's deal. And separately, IBM is buying Confluent. We're going to break down both of those stories for you. And we are also going to preview Oracle and Broadcom earnings, which are coming up this week. We're also bringing on our OpenAI reporter for an update on how things are looking on the ground as the company works through its code red. She had a conversation with the man leading ChatGPT through it all, and we are going to share with you what he had to say. We're then bringing you a recap of a major AI research conference that happened last week. There was some big questions that swirled around AI breakthroughs in biology. And finally, we are debuting our weekly crypto segment. This week, we're going to be unpacking the momentum in predictions markets. It's going to be a busy show, so let's get right on into things. Paramount has launched a tender offer for shares of Warner Brothers Discovery in a hostile takeover effort. The company is offering $30 a share just days after Netflix agreed to buy WBD in a deal that many have thought would have a lot of trouble getting through antitrust regulators. Here to break it all down is Martin Pierce, co-executive editor at The Information. Martin, how was your weekend? It was a busy one watching this unfold.
Pleasant. No, my weekend was very pleasant because the Netflix deal was on Friday, so it was fun.
Okay. I have to tell you that we thought this was going to be Larry Ellison's week. I mean, this is Oracle's week in the spotlight, and now you have David Ellison coming in and saying, "No, I'm taking control here of the narrative."
David is being backed by his father. That's very clear from the tender documents, because they actually they point out that his father has a controlling stake in Oracle, which is worth $250 billion. So that's where a portion of the money that Paramount is offering for WBD is actually coming from.
Okay, so also I didn't realize they said that outright, which is an interesting link. Tell me a little bit about what your reactions were to the takeover efforts. Was this expected?
Yeah, there was some speculation on Friday that this would happen, and it honestly makes sense. Paramount says that they made this offer last week, that the board of WBD didn't really respond, and they certainly didn't. They don't seem to have really thought it through, because they went with the Netflix offer. This way, shareholders have a clear alternative. The shareholders can now tender into the offer. It won't close immediately, as Paramount has to get approval from the government, but Paramount says they think they can close in a year, and whereas Netflix thinks they would take up to 18 months. And of course, there's an enormous uncertainty about whether Netflix would get approval. Already, Trump has come out and sort of said that, he sort of indicated he doesn't think that Netflix, should be allowed to buy it. If you take this from a regular antitrust analysis, both companies would have issues. Paramount already owns a major studio, so this would be combining two major studios. But we're not in a normal environment. The Trump administration obviously really will act on behalf of Trump's allies, and the Ellisons are clearly allies of Trump. So I think we can assume that Trump will approve this deal, and that gives Paramount a huge advantage over Netflix.
Now, one thing I just wanted to make sure I was clear on is that this tender offer, is this for the whole company, or is this just the streaming?
No, this is for the entire company, which is the other thing about it. It makes it much easier for investors in WBD, because the Netflix offer is only for the studio and the streaming services. So that offer assumed that Warner would split up before the offer went through. So investors in WBD would have to be thinking, well, what is the value of the stub that I'll get in the networks? Whereas now they'll know they can actually compare these two offers very easily. I think Paramount has got to be seen as the most likely winner in this right now. Netflix could come back and raise their offer, but really, it's not clear to me that they can afford it, and I think it would put a lot of pressure on their own stock price. So I doubt they will do that. They might, but I kind of think that they probably won't.
And why do you think Paramount is willing to take on the entire business? I mean, you talked about how the cable side of the business. I mean, it's really the side that nobody really wants. I mean, why does Paramount? Why are they willing to take on the whole thing, and why does it make
Well,
strategic sense for them?
Paramount already has a significant cable channel business. They own CBS, which is broadcast more than cable, but it's still the same kind of thing. They've got CBS, they've got MTV, they've got Nickelodeon. If you combine those with Warner's, I think there are some economies of scale that you could get out of it. And I mean, honestly, most people think that even though that business is declining, it will continue to exist, and it certainly makes a fair amount of money. So that could exist for years to come. So I think their view is we may as well put these two together. They'll be more profitable combined, and that's fine.
And last question for you. I mean, if you look at what WBD shares have been trading at lately, I mean, both of these prices, Netflix's offer and the Paramount offer. I mean, this is WBD shareholders seem to be big winners in here, regardless, because they're getting it.
Yeah.
My question for you is, I mean, in terms of the valuation, what did you make of the Netflix valuation that they were offering? What do you make of the Paramount valuation that they're offering?
I mean, I think the Netflix offer was, I think, too high because they're only buying a portion of it, and the portion that they were buying is not the main profit
Right.
generator, whereas Paramount is buying the entire thing, and they will therefore get more access to more of the profits of the company. So I think the Paramount offer is a more logical offer, valuation wise.
Great. Well, Martin, I want to thank you for coming on. I'm sure that this story will continue to unfold. And so we will talk to you more and more as it happens. That is Martin Pierce, our co executive editor here at The Information. Okay. IBM announced this morning it is buying Confluent, a data streaming company. The company is paying $11 billion in cash. The $31 share price IBM is paying is a 33% premium to what Confluent was trading at on Friday. Joining me now to break it all down is Paul Meeks, head of technology research at Freedom Capital Markets. Hey, Paul, how you doing?
Great, man. Thanks for having me.
Great to see you. So there's a lot going on this week. We'll get to earnings for Oracle and Broadcom in just a second, but what did you make of the IBM Confluent news this morning?
I think it's a smart deal. It's a continued pattern of some acquisitions to build out their footprint in enterprise AI. Like a lot of analysts that are valuation sensitive, I think they paid way too much for it, right? A pretty big premium. Here's a company that is only supposed to do 48 cents earnings per share next year, up from 40 cents this year. So not much EPS growth, and you're paying 65 times earnings. Revenue growth has been good there, but not EPS growth to match. So strategically, I like it. It's a nice product suite. Boy, they're paying a lot.
How much do you think would have been a fair price for Confluent?
Actually, where it was trading on Friday before the big premium markup, I think is more than fair. Particularly because it's an all-cash deal, and they are a rather small company putting themselves in the hand of IBM and IBM's enormous enterprise sales force. You would expect it to have a nice growth kicker after the deal.
So remind us what exactly Confluent does, and then we'll talk about how IBM sees it strategically fitting in its AI product suite.
So it is going to allow IBM to better manage data streaming, real-time data streaming. And so it's a addition to the product suite. It is another arrow in the quiver. And it makes a lot of sense, as I said.
Right. And tell me a little bit where IBM these days, I mean, it's a company in many ways that, I mean, they were very early to AI, right? I mean, back in the what was IBM Watson, that was some of the earliest AI that we saw. What's happened to that company in terms of being included in the conversation? I feel like we don't talk about it as much. We know it has a big consulting practice. Where is the company now?
So I actually think it's had a nice renaissance, right? This used to be my grandfather's marquee tech company. It went into the doldrums for a long period of time. Each and every quarter that they reported, their revenues would be down year to year, and that went on for years.
Right.
So with the relatively new CEO, turning the company on a dime and several years ago, essentially pivoting to not the public cloud that everybody else was pivoting to, but a hybrid private public cloud, which actually worked very well with enterprise customers. And so they have seen a nice burst of growth, at least coming from a very sleepy company. They've made some fairly savvy, like maybe this one today, bolt-on acquisitions. And they're always going to be somebody that if you are a chief technology officer of a big company, you're always going to look at them. For decades and decades, they've been marquee in the enterprise, and they're trying to do that here in AI. And of course, they're also working very hard on quantum computing right now.
Let's pivot to talking about some news that we have coming up this week. We have Broadcom and Oracle reporting earnings. Let's start with Oracle. What are you watching for with that print?
This one is very sensitive because remember last quarter, they announced this huge revenue backlog, which we find out later on is essentially all OpenAI. And the stock, after they reported, went up a third. And then people said, oh, my goodness, they're going to have to spend a lot of money. They're going from generating a lot of free cash flow to burning it. And we'll see if OpenAI is going to be able to pay the bill. And so then the stock collapsed and it went down even lower than what it was before the announcement. So what I need to see here is I'm not necessarily worried about what they report this quarter for revenue and EPS. I'm sure it'll be fine, but they're going to have to do a couple of things or else they're going to be in some trouble. They're going to have to give us a comfort that this OpenAI backlog is for real and it won't be debooked. And also, they're going to have to give us some comfort that at the end of the day, after all this AI infrastructure spending, they are going to go back to generating cash and making a pretty good profit margin. Because that has been the narrative. It went from immediately positive after their last call to horribly negative, and that's where we are here. They're going to have to change the narrative.
Right. It's almost like, look, sometimes you can get away with not listening to the call. You can just read the press release, read the numbers, and get the information you need. This one, I actually think it's the opposite. I think you can probably skip the numbers in some cases. You really got to laser in on what executives say. It's almost like the Federal Reserve statements. I mean, people are going to be really nitpicking in terms of, well, why did they say that? Is that a signal for things going slower?
Yeah, and it's a very good point you make. Like, for example, does it really matter what they report with revenue and EPS? I don't even know if it really matters what they report for their guidance for revenue and EPS. It's going to be long term. Is there going to be a pot of gold at the end of this AI rainbow? And you are super dependent on OpenAI. Is that savvy? We'll see.
Right. Very quickly, before we get to Broadcom, what do you think of we've read a lot in the news about the credit default swaps for Oracle having ticked up in price. What do you make of that?
Well, it's obviously a negative, but I don't think that you'll ever have a situation where Oracle, even though it's now stretched, will have any problem paying its debts.
Right.
I think Oracle is going to be fine. Now, you may say, are you spending your money? Are you being smart? That's in question, but I think they'll be just fine, right? Here's a company that they will spend, but they were a prodigious free cash flow generator. And you think about it, if they ever wanted to raise money, Wall Street would be happy to give it to them.
Right. Very quickly, what about Broadcom? What are you watching for there?
So Broadcom will be very interesting because Marvell Technology, its key competitor in essentially designing these XPUs for the hyperscalers, so they're not necessarily beholden to NVIDIA's GPUs. Marvell had a great report, even though the stock's getting hammered today on a Wall Street downgrade. So it'll be incumbent upon Broadcom to do the same because Broadcom is valued at a steep premium to Marvell. And so they're going to have to show that they're really worth it, or I think the valuation gap will close. And so we all know it's going to be good news, but they're going to have to make us feel very good that they are gaining share, particularly against Broadcom, with these hyperscalers to help them design their essentially NVIDIA GPU lookalike chips.
Right. Well, Paul, I want to thank you for coming on. It is a busy week, and so happy Monday to you. Good luck with everything, and we'll talk to you again very soon. Thanks for coming on the show.
Best wishes, brother.
Okay. Since the code red that Sam Altman issued last week, our newsroom has been feverishly talking to sources inside the company to understand how things have been changing on the ground. And through all their reporting, one name has come up time and time again, and that is Nick Turley, who heads up product for ChatGPT. Here to tell us more about why Turley has become such a central figure at OpenAI's business these days, I want to bring on Sri Muppidi, who co-authored a great profile of him over the weekend. Sri, welcome to the show. Happy Monday.
Happy Monday. Great to be here.
So, sounds like you had a busy weekend talking to folks at OpenAI. Tell us about who Nick Turley is.
Of course. So Nick Turley is the head of ChatGPT for OpenAI, and that is a huge responsibility for a company that has 800 million plus users. Nick Turley's main role is to support the growth of ChatGPT along with any other types of business models that support that growth as well. For example, exploring ads as an opportunity, but it also includes making sure that you have enough GPUs, for example, to be able to service ChatGPT as well. He actually has been at the company for since the start of 2020 or since 2021, before even ChatGPT even launched. So he was one of the main folks involved with launching ChatGPT from the beginning, and has seen that growth of that product over the last couple of years.
So it's not that he's only involved in sort of the front end design and the product side of ChatGPT. He's also involved end to end in making sure that the thing has enough compute to operate. I mean, it's very much a comprehensive role.
Yes, exactly. I think he began as like an IC product manager, which means that you're specifically involved with like building the product itself. But then
Right.
over the years, his responsibilities has increased. So he had more control in terms of hiring people and delegating responsibilities. And then this year, he was promoted to the head of ChatGPT role, which is more of a cross-functional role to be able to ensure that one product is going as well as it could be, but also ensuring that he has the necessary resources for ChatGPT to succeed.
And so talk to me about how his role has changed now in the last week, given that we are amidst this code red at OpenAI. Why has he become such a more important figure? Is he kind of quarterbacking things?
I'd say that Nick's role has really been something that has been solidified over the last year or so. I think more so Code Red just emphasizes that ChatGPT is such a pivotal, important part of OpenAI's growth. For example, having 800 million plus and being able to continue that growth to be able to hit 2.6 billion weekly active users by 2030 is a really intense goal, but to have someone to be able to look to. For example, Nick apparently has weekly top of mind Slack messages that he shares with folks on their priorities. He writes these memos for people to understand the strategy and gets really involved with like working with folks day to day across different types of the org.
Right.
I think that why Nick is sort of being put to the front now is just because of his role as the head of ChatGPT to make sure that ChatGPT is able to continue to grow more than ever. Across the different conversations that we've had, one of the things that came up is that OpenAI is always in an urgent mode and always is working towards things. And so some folks, for example, have described it as like this last week being no different from weeks prior.
Right.
And so they didn't really actually agree with the code red part. But I think that Sam's memo really emphasized that there is truly a code red. So I think there's a different perspectives there.
Now, you talked to him. You had an interview with him a couple days ago. What did you learn from that conversation?
Yes, exactly. So it was great to talk to Nick in terms of understanding his priorities. So one of the key things about making ChatGPT to continue to grow is Nick's vision of being able to have it be a super assistant for people, where he described it as almost giving them superpowers to do things that they weren't able to do. For example, coding if you weren't able to code, or getting medical advice if you weren't able to visit a doctor. And I think that super assistant vision really fits into sort of his other priorities of making, one, the product very very personalized to you. So that means that as you use the product more, it understands you more and can provide, for example, the things that Shri specifically needs. The second is to have the context of ChatGPT. So that means like connecting it to different apps and things that is important to you. So, for example, my Slack messages or my photos, if I need to like pull up different types of photos of my dog, for example.
Right.
And the third is to actually take action on behalf of the user. And so this is building upon like the search functionality. And Nick was actually one of the key folks that we found out of leading Search GPT, which is the search features that is incorporated into ChatGPT to make sure that the model is all up to date.
So let me ask you this. You had this conversation with him, and you certainly spoke with, I think you and our colleagues spoke with 20 people who have either worked with Nick in the past or are currently working with him through the course of your reporting. From that conversation, from all your reporting, did you walk away thinking that, I mean, Nick's got it under control. I mean, they're going to figure this out. OpenAI, they have this lead. The code red is about the lead sort of narrowing, but, this is to sort of see if they can widen it. Did you leave away with a sense of confidence, or did you leave the conversation thinking, you know what, I think the balls are in the air right now. I mean, we still need to see how this plays out.
I think that AI is moving so quickly that you really don't know who's going to stay in the lead. I think it's just going to be really exciting to see OpenAI and Google and others be able to compete and move ahead quickly. I think one of the areas of feedback that like folks had given Nick in terms of our conversations was that at times that he as technically rooted in some of the specific research problems that researchers were working on. And so I think as research continues to increase and rapidly improve, I'm curious to see sort of how he's able to adapt to that and be able to incorporate it. So far, he's been able to do a great job of it so far in terms of actually turning ChatGPT into a product that folks are using based on GPT-3 research. But I think that there's still sort of opportunity for the company to continue iterating. So I am curious to see. I think there's a lot of questions still that I'd love to have answered. For example, how will you be able to pull off the super assistant vision? And with all the sort of other priorities that OpenAI has, I know Sam has sort of tried to focus everyone to focus on ChatGPT, but I know, for example, efforts, for example, to focus on advertising in some ways as well. So it'll be an exciting time for sure.
It's a big job. So we appreciate you bringing Nick Turley to our attention and coming on the show and talking about him. Thank you so much. We'll get back to you later this week, as I'm sure there'll be more news to uncover. That is Sri Muppidi, who covers all things OpenAI and Anthropic here at The Information. Okay. While researchers at OpenAI were responding to a code red, many other researchers were gathered at one of the most important conferences for AI research, the Neural Information Processing Systems Conference. It's not a conference about neuroscience. It's a conference about AI. My colleague Stephanie Palazzolo was there on the ground all week, and she wrote a story this morning about what she learned, and I want to bring her on to tell us more about what the talk of the town was on the ground. Stephanie, good morning. It's great to have you here.
Hi, good morning.
So what is this conference that has a terrible name, if I'm being honest, but apparently is the place to go for research?
Yeah, so it's much more commonly known as NeurIPS, which is a lot easier to say than the full name. But essentially, NeurIPS is one of the kind of largest conferences held each year for AI researchers. And so in the past, it's been really more focused on academic researchers. But in more recent years, it's become, much more popular for people to go to. And so this year they actually had more than 25,000 people there, including, not only researchers, but now startup founders, investors that want to back them, and of course, journalists like myself.
So you opened your story with this line from David Luan, who does AI research at Amazon. The quote that you started with is, he said, "I will guarantee that the way we're training models today will not last." Why did that line stand out to you? What did he even mean by that?
Yeah, so David, who previously was the CEO of a company called Adept, and then also prior to that, he had also led engineering at OpenAI for quite a while. He was very quick to say, whenever he says this sort of comment, he doesn't mean that pre-training is dead or scaling is dead or AI is over, but he's basically just saying that we're clearly missing some kind of key ingredients that we need to have in order to reach artificial general intelligence. And he does believe that model development is going to have to change a lot over time to be able to reach AGI. So, for instance, one thing that he and a lot of other researchers at the conference talked about, which I wrote about in this morning's piece, is the importance of something called continual learning. And so basically that is AI that's able to keep on learning even after it's been trained. Um, and then, so we also talked a lot about, David also talked a lot about the order of steps in training a model and
Right.
how it doesn't necessarily make a ton of sense. So, right now, there's a ton of compute and time that's spent in a phase called pre training, where a model just looks at a ton of data from like the internet and books. But David basically made a point, which is, why are we spending so much time showing models this kind of random, very general, but like ultimately maybe not super relevant data from the internet when we should be showing it more data that's related to the sorts of tasks that we're going to be asking the model to do in the future.
Now, how does all this connect to some of the questions that you wrote about being raised around the physical sciences and biology, for example? This has been a big promise of AI that, hey, the chatbots are one thing, but this could actually lead to cures for some of the diseases that we haven't been able to find them for yet. I mean, I walked away from your story thinking that maybe people were a little bit skeptical of at least the near term promise, and also that promise actually being achieved, given the way people are working on it. Talk to us a little bit about that.
Yeah. So, I mean, I think it's important to mention that, like, clearly AI companies are making a lot of money today from existing AI products, even if we're not to the point where AI is like finding new cures for diseases, and we're clearly we're clearly not at this kind of super intelligence phase. So, there's a lot of money to be made, no matter what happens, even if the AI progress were to stop today. But yeah, I think in general, and not only at this conference, just from news stories we've seen in the past couple of weeks and sources that we've talked to, there has been kind of this growing skepticism around whether AI models will be able to kind of generalize beyond the data that they were trained on. And so, will they be able to come up with new discoveries that they've never seen before in training data and go beyond kind of the knowledge of the researchers that are training them, and also the human experts that companies like OpenAI and Anthropic are hiring to, write examples of tough answers and questions in fields like biology, medicine.
Right.
So I think a lot of the researchers think that if AI is able to do some sort of continual learning, um, then it would be able to learn more similar to the way that humans do, where we don't need to be shown like 10,000 examples of how to solve a math problem to be able to learn how to solve a math problem. We kind of just learn from experience and from, trial and error, basically.
Right. Right. Well, I know that it was a very buzzy conference, and so I want to thank you for coming on to tell us all about it. We'll talk to you again very soon. That is Stephanie Palazzolo, our AI reporter here at The Information. Okay, we are launching a new weekly segment here on the show about crypto. Every week, we'll bring on our crypto reporter, Yueqi Yang, to talk about what the hottest topics are in the crypto world and what her analysis is of the biggest stories of the day. Over the past week, Kalshi has been one of the central points of attention with its $1 billion funding round at an $11 billion valuation. That is more than twice the valuation that it fetched in October. And I want to bring on Yueqi to help us break this all down. Yueqi, it's great to see you. Welcome back to the show.
Hey, Akash.
So for our first segment, the weekly crypto segment, we are going to talk about prediction markets. Can you help me understand, why, before we get to the news, why is there such a connection between prediction markets and the crypto world? I know that we're talking about betting here essentially at the end of the day. And I know that Brian Armstrong likes to talk all about these prediction markets on his earnings calls. But, is the underlying technology here for prediction markets, is that built on blockchain at all? Or is it really just the same crowds that are sort of overlapping?
That's a great question. I think there's a significant overlap in terms of the kind of users who are betting on crypto exchanges and the ones who are using prediction markets. And we also know that some of the investors that funded the biggest two prediction markets, which are Polymarket and Kalshi, also include a lot of crypto investors. Paradigm, for example, is a major crypto venture fund, and they founded Kalshi. Andreessen is also very big in making crypto investments, and they are also investing in prediction markets. So just from the early adopters from user base and also from investor base, there's significant overlap.
It is kind of funny to me though, because I mean, blockchain, the advent of cryptocurrency, it was meant to give people this other financial system that really modernizes, a lot of the infrastructure that people said was old. It's outdated, right? And that was sort of the promise of blockchain altogether. I don't know. I look at prediction markets and I sort of feel like, I mean, it's just a product that makes a ton of money and it's kind of fun. Like it seems very separate from the promise of cryptocurrency and blockchain altogether.
I would highlight that for Polymarket, they do use blockchain to settle trades.
Okay.
So people who are betting on Polymarket, they will pay for their bets using stable coins, specifically USDC. And when the event has an outcome, the trade is settled on the blockchain. So there is
Okay. So there actually is a component there.
Right.
Okay,
But not every prediction market has to use blockchain. Kalshi, for example, in the US, does not use blockchain. You use a traditional clearinghouse system, and so blockchain is not necessarily a must-have. So I think, which is why the user base and the investor base is more relevant.
So that brings us to the valuation that they just got, $11 billion. It's up more than twofold from October. Talk to us a little bit about what people in your orbit think of this valuation. Do they think that it could get even higher, or is it something that people say this is pretty rich?
Yeah, so I think it's really a sign of intensifying competition between the two biggest providers, Kalshi and Polymarket. We know that Polymarket recently announced that they raised funding from the New York Stock Exchange's parent company at an $8 billion valuation. And that was obviously a big number when they were announced that in October. And then Kalshi quickly kind of followed with another funding round that lifted their valuation to $11 billion, which would be higher than the valuation that Polymarket recently got. So the two platforms are really competing for both investor capital, for users, for partners. And this is especially important now that Polymarket is launching in the US and getting into the home turf of Kalshi.
Right. Let me ask you this: prediction markets? It feels to me like, I mean, you could bet on anything, really. That's kind of the beauty of it. In some ways, the market size is so large, and it's almost easier to understand than cryptocurrencies because why should I have to become familiar with all these different cryptocurrencies and digital assets when I can understand very clearly what betting on the election, for example, means? And by I mean customers, to be clear. I've never used these platforms. But I guess my question is the thought amongst people that these prediction markets could get even bigger than crypto exchanges, given how easy they are to understand and how applicable they could be to different markets?
Yeah, so right now prediction market volumes are much smaller than crypto markets volume. So they're not as comparable to crypto market trading yet. But then for people who are building prediction markets, investors, I think their longer term vision is that prediction markets is going to be a new asset class and it's going to be able to disrupt traditional forms of trading. For example, as you mentioned, people bet on elections. Traditionally, ahead of big presidential elections, if you are investors, you might express your view by betting on whether the stock market will go up or down based on who gets elected. But now you can go on prediction markets and bet on just who will become the president, and that's a more cleaner expression of your view. And that's what the advantage that prediction market operators are pitching.
But is there anyone that says that, this could be even bigger than crypto exchanges?
Well, I think if you talked to the founders of these prediction markets,
no,
they have pretty
right,
high hope. And I think
right, right.
I don't even think they're comparing themselves with crypto market size. I think they're really aiming for traditional financial markets.
Right, right. Let me ask you this, just give us a sense for, do we know how much revenue Kalshi is generating and Polymarket as well, how big these companies are there? And
Yeah, so Polymarket doesn't currently generate meaningful revenue because it doesn't charge fee yet. Um, and Kalshi does generate revenue, and my colleague has reported that their annualized revenue pace is increasing very fast in the hundreds of millions of dollars recently, as they shared privately with investors. So we'll see, and we also know that for Kalshi, in the future, in the long term, they will have IPO plan, even though we don't know the specific timeline for that yet.
right. It's kind of funny because, on one hand, we have in the AI world, we have OpenAI and Anthropic kind of duking it out, right? They were the startups, they're fast growing. You have Kalshi and Polymarket, they're very much duking it out. But then you kind of, in the same sense, in the AI world, you have the hyperscaler companies like Google. They also are very much now competitive. I'm sort of thinking in my head, okay, so you have the startups duking out against each other. Could there be a larger company that suddenly decides to get? We know that Coinbase is also, although Coinbase is they're using one of these platforms in their prediction markets offering, right?
Yeah, I think you make a great point, and this is exactly the similar dynamic that we're seeing right now in this prediction market space. The bigger brokerages and bigger crypto companies are launching their own prediction markets, and they could be competing with Polymarket and Kalshi in the future. And I think the thinking from Polymarket and Kalshi right now is they want to partner up with these bigger guys coming to the market, and they
Right.
can potentially share revenue with them and aggregate liquidity across different platforms.
Yeah.
But we also know that some of these companies will want to retain greater control over their products. Robinhood, for example, recently announced that they are going to launch their own prediction market exchange. And so far, they already have a prediction market product out there that is powered by Kalshi. But then in addition to the partnership, they also want to build something on their own. And I think that's a sign that we will observe more with other players coming into the market.
Great. Well, I want to thank you for coming on. I hope we get to talk more about this market, and I think we will, because I think this is just the start of news. And so I'm so excited to have you on weekly. That is Yueqi Yang for the first of many weekly crypto segments here on TITV. Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.